Well, hello everyone. Welcome to Getting Started with Technical Analysis. Today we are going to talk about support and resistance. And I am not talking about like the unconditional support that you always got from your mother. I am, not talking about James Boyd's resistance to admitting how much he absolutely loves Canadians, or the resistance you get from a teenager about almost anything, especially if you're a parent. But we're going to talk about technical support and resistance. We're going to look at a lot of charts today, and we're going to play some example trades. So, that's what's on the menu for today. Yeah, so let's get right down to it. We've got Mr. James Boyd with us in the chat, hence my comment on James' love of Canadians. And he's a friend, obviously, and a fellow coach. And he has at least an elementary grasp of charting, which is probably why he's here today. Actually, I've learned a ton from James. So if you've got questions, don't hesitate to type them into the chat, and we'll do our best to answer those for you. And you're going to want to follow James and I on X. James is a prodigious poster. He is posting all the time. And guys, this is another free resource and a way for us to communicate with you and you with us. And if you're not following us on X, I open an account with X only for my Schwab life. And I do post something motivational, on a daily basis, but I think that's part of the psychology of trading. But if you're not following us on X, you're missing out. So at Barb Armstrong CS, at James Boyd CS. And before we get into things, know that we're going to look at a lot of charts. We're going to look at a lot of examples. We're going to do some example trades. And all of this is, just for illustrative educational purposes, not to be construed as a recommendation on the part of Schwab or myself. And this is a technical analysis class. It's called Getting Started with Technical Analysis, right? So, that is going to be our focus. But that isn't to say that we might not want to look at what the analysts are saying. When earnings is coming, we might not, we'll want to put this into kind of geopolitical perspective, with what's going on globally. And so all of these things we want to consider also. But with charting, the philosophy behind charting is that every chart that we have is a reflection of all information known about that stock publicly at the time. Okay. And so the charts do reflect what's going on geopolitically and within our own country, and with earnings coming up, and with what the analysts are saying and doing, and all of that great stuff. And so that's why, we dedicate a class to getting started with technical analysis. And then we have another class on Fridays, which is advanced technicals. And it didn't matter what I taught. I always referred people to this getting started because, like, for me, I can't imagine placing a trade without looking at a chart. Other people, are more technical, not technical traders. They're looking more at probabilities, and they might not look at charts at all. I do not understand these people. I will admit that, but apparently they do exist out there in the world. So today we're going to talk support and resistance. We're going to blow through pretty quickly some charts. And if you're brand new to this, know that this is being archived. And so you can go back and watch these again and back it up and replay things as you like. I want to thank, so many of, who I affectionately call the usual suspects, and many of whom I've had the privilege of getting to meet. I appreciate you guys being so boisterous in the chat. So to Sharon and Riceberg and Will and Charles and JD LMI and Morning Rush and Josh and Jim and Lena and the rest of the gang, thank you all for being here and for doing such a great job of bringing so much great energy to this class. So we're going to look at kind of the basics of support and resistance. We're going to look at ways to identify it. We're going to look at how trend lines contribute to this discussion, and then we're going to go out and make it come to life by looking at current charts. Okay. So when we look at support, and I don't know if I'm just an easily confused person, but I kind of keep them in line by thinking, okay, resistance is, it comes before support in the alphabet, R before S. So resistance is the ceiling. And I will often in classes to this day, and I was introduced to the world of trading through this education actually back in 2011, support I think of as a floor. And so support is where investors tend to come in and buy when it reaches that price. And the way I kind of look at it, and I've used this analogy many times also, but my father-in-law was, oops, you can see I've been posting stuff on Twitter today. So let's come over here. He was really big on history, and my kids from the time they could crawl, they'd lay on the floor and create hills and valleys out of blankets and have their knights and kings and discussions on who led who into battle and all of that kind of stuff. But I kind of see when something comes down and hits a support level, it's a knight protecting this line, and as it comes down and hits, more and more knights join this barricade and strengthen the support level. And so it came down here again. It didn't really come all the way down, barely came into the neighborhood, so to speak, but it came and flirted with this line. And you can see that we have a line, but there's also this gray area here. And this is to kind of illustrate that support and resistance, it's not a finite number, it's a range. So I often talk about something flirting with support. And it'll come down and here, like it hung out here for a couple of weeks, kind of gaining strength, and then it took off. And this is, I'm sure, a pattern from a live chart. I don't know which one and I don't know when, but some might look at this pattern and say, ooh, could it be setting up a head and shoulders pattern where, here's the first shoulder, here's the head, and could this be the next shoulder? We don't have any more on the chart, in which case they talk about this being a neckline. And if it breaks that support level, then they'd measure that range and say, if this is a $20 range, then, a goal might be a $20 move to the downside. So support, to take away, it's a general area, not a specific price. And the more time support holds, the more knights that join the line to protect it, the stronger it's considered to be. Okay. So this is where when something falls, buyers tend to come in and go, okay, it's come back to this level. I like this company, I'd like to own this stock, or if you're an option trader, maybe this is when you put a short put vertical on here or a long call vertical on when it bounces here. There's lots of trading strategies that one can look at. All right. So let me just shake my Etch-a-Sketch over here. And we'll close that. Now resistance is just, we're going to flip it and reverse it. And this looks like what we would call an inverted head and shoulders pattern, which isn't necessarily the topic for today, but again, these same concepts in reverse, right? Like I see the knights, there's one, now there's two, now there's three, now there's four, now there's like a whole infantry coming in, and again. And the more times it hits this ceiling, I think of resistance as a ceiling where when it gets up to here, sellers say, oh, looks like it may be rolling over, I'm out. And so it resists, it's kind of this wall that you have to break through, or this ceiling you have to break through to move ahead. And again, we see this area demarcated here just to indicate that it's a general area, it's not a specific price. Now, having said that, I will say sometimes it will blow my mind that something will come up, a $300 stock will come up to a resistance level or down to a support level, and it will come to within like pennies or maybe 25 or 50 cents. you know, of the previous low. So, there is something about technical analysis that continues to enchant me. And the more times it comes and hits, the stronger it is considered to be. That doesn't mean it's never going to break out, because we see examples of that all the time, of it breaking out. So support and resistance, floors and ceilings. All right. Now, one thing about support and resistance is if a support level is broken and it crashes through the floor, sorry, if it crashes through the floor, then often that old floor can become the new ceiling. And I think of that, like in my mind, I think of it kind of it like an apartment building or a home. Where if it does break through, it can, when it tries to rally again, old support, new resistance. And in fact, that is what we saw happen with this chart. And so that's something else that we need to be aware of when we're looking at stocks and when we're trying to place targets. Like if this came and broke out again, and James does a great job of pointing this out when he teaches. Don't tell him I threw him a compliment there, but he'll point out all the time, like, hey, this was a resistance level. So even if it breaks out and comes back and bounces, we may want to put in an alert. It may not get past here, or if we're putting in a trade, we might want to make this, former resistance level a target. Okay. All right. And then this works the other way around. Old resistance can become new support. Old support can become new resistance. When we look at trend lines also, like if we put a 30-day moving average or a 50-day moving average on our chart, we can see that quite often, whether it's a bearish trend line or a bullish trend line, those can form support levels. And I find that drawing lines on a chart really helps kind of sort through sometimes the noise on a chart and makes it easier to see the patterns. And, they say that horizontal support and resistance only needs 2 point of contacts, where a trend line, you want to find at least 3. Okay. And, this is another thing that I will often draw on the chart. We've got this support level here, and then you can right click on that line, duplicate it, and then drag it up to see where the ceiling is. And particularly, I mean, you could do this with a stock too. Say, I'm going to buy when it bounces and I'll sell when it gets up to this old resistance, this anticipated resistance level. And so you sell here if it comes back down to this line and bounces. You could buy the stock again and say, I'm going to put in a target kind of where I see this resistance level potentially going. Okay, so these types of ranges can provide potential targets or exits for you, and can provide entries as well. And then in this case, it broke to the downside. And so you may have entered a trade here and this one worked, this one worked, this one, not so much, which is why it's so important to position size appropriately and, to know when you're getting out before you get in, both if the trade goes for you or against you. So in this example here, just let me grab my drawing tool again. If we had placed the trade here when it was bouncing, when we placed that trade, we may have said, okay, we're going to put our target up here. But if it goes down below this line by 2 or 3%, I'm going to get out here. And then even though you got out for a loss on this one, you would have been grateful and, at risk of throwing your shoulder out for patting yourself on the back because like it continued to fall. And even though you took a little loss, last time I checked, a little loss certainly beat the stuffing out of a large loss. Okay. Okay. So this is just some of the ways that a technical trader will use support and resistance and the channels created by support and resistance um, to help determine targets and exits and to introduce or continue to incorporate discipline into their trading. The last, slide that we're going to look at before we go out to the chart is gaps. And we've seen a lot of gaps going on lately. And, a gap can form a new resistance level or a new support level. And in this case, we saw a stock that gapped up. It might have been on earnings. It might have been on news. Came back to retest once, came back to retest twice. So some might say, ooh, is this setting up an inverted head and shoulders? Well, we don't know, and we'll never know because this is just a chart that we don't get to see how the story ends on this one. But we can see that this gap became provided a new level of support. Okay. All right. Oh, I guess I must have buried. Oh, here we are. So let's get out to the platform. And I had said before we started, but I'll say it again. If anyone has ticker symbols they would like me to look at, just type them into the chat because we're going to look at lots of different examples. And, there are some I specifically want to look at. I'm just going to scroll up to see if anyone had typed some in. There were a couple. Somebody was talking about boogieing on the black diamonds. Like a lot of the ski hills around here are closing. We had perpetual spring here. Dell was on my list. I think TXN may have been as well. Okay, so if you have other, oh, okay, now they're coming in. Okay, so but we're going to start. We're going to start with the SPX. And when we look at this, and one of the things I want to point out, and it's not going to be the first time I pointed this out, but when we look at showing price as a percentage and a 1-year chart, the S&P 500 up 28% in the last 12 months, which is just not too shabby. Over the last 30 years, on average, the S&P is up between 10 and 11% over the last 30 years. But what we're seeing here is kind of a V pattern because we did officially get into correction territory. We were down over 10%. And then like in very quick fashion, and let me replace this line. If you want to see like how much it's moved up, we'll just take this drawing tool. We're up 10% in how many trading days? In 11 trading days, in 2 weeks, 2 calendar weeks. We've recovered most of this. So, this V pattern, right? This V pattern recovery. And so if we look at this here, we're right there. And we've got similar patterns happening on the NASDAQ. Now, we haven't quite made it back, to, oh, I think I was intending that to be there. Let's come in. To this previous high. But if we look at this, it's kind of on its way. Like, and we had a gap here, another gap open today, like this index up 1.4%, and at 12% in 11 trading days in about a 2-week period. So, a pretty big a pretty big move to the upside. And the VIX now back down under 20, like, holy smokes, Batman. Like a couple of weeks ago, we were up here at 30, up in the nosebleeds. So it just goes to show you how quickly things can turn around. And a lot of that is being attributed to the fact that things are settling down with the Strait of Hormuz. Oil is starting to flow again. Oil prices are coming down, and that's hit the energy sector. So we can see that a lot of these energy stocks are pulling back after a pretty incredible rise. So the first one I wanted to look at, because this class is today about support and resistance, I thought we'd look at a little Netflix. Don't know how many of you ever watch a little Netflix, but when we look at this, we're seeing a potential ceiling or resistance level here, where it came up and then pulled back again. And I just posted this chart on X, but we're seeing like this cup, what we call a cup and handle pattern. And we've got a support level down here where it hung out for about a week. And this pattern has been months in the making. It started back in December. And then we had this horizontal breakout, and it's continued on to the upside. Now, we do have earnings coming up, but if you said, I'm pretty, I look at KeyBank has raised their price target to 115. KeyBank, oh, I already said KeyBank. Guggenheim has a 130 price target. Like, that's off our chart, for crying out loud. But if we looked at this and we wanted to set a target, we could do it a couple of ways. One, this was about a 24-point move, $24 and about 26 cents if you want to get specific. So what some traders might do is say, I'm going to buy the stock and I'm going to create a target $25 higher than this 99 or $24 higher. So I'm going to make my target $123, say. Now, what about a stop? Well, we have earnings coming up. And I remember James talking about this back in the day, and my thinking that protective puts were a waste of money because I could do a stop loss order for free. And then I would get nicked out on earnings on a candle, something like this, where it opened lower, traveled way lower. I got nicked out, and by the end of the day, it was up. Like, and doesn't that just, like, here, it gapped down on the open, and by the end of the day, it had rallied, and maybe I wouldn't have been stopped out. And so some traders might choose to use a protective put over earnings. And this class is really more about technical analysis than strategy. But if we look at this as, here's a breakout of resistance, here's an opportunity. This stock has certainly traded higher, not to say it's ever going to go back up to 134, and this had a 10-for-1 stock split. But if we wanted to do an example trade based on support and resistance and a breakout through resistance, maybe we come in here, and if we were to use our a stop loss, we might put that around 96.75. So if we came out here, we could say, well, I want to buy some shares, and we have a $500,000 account. So let's say we want to buy 200 shares. So I'm going to link these together and make this 200. I'm going to put a target in on this of 124. Oh, actually, Earth to Barb. So we're going to buy our 200 shares. And then we're going to do a first triggers sequence. Actually, a first triggers sequence. And we are going to put in an opposite order. That's a stop. That's our target at 124. And then we're going to come up, and instead of doing that OCO order where we're adding a stop, we're going to come down here and we're going to click on the buy, and we're going to buy a put. And so some might look at it, this isn't how your accountant will necessarily look at it. But your accountant you might look at this and say, I'm looking at it as my expectation is that the stock will continue to go up in the highly unlikely event that I'm wrong. And I say that kind of tongue in cheek because it's over earnings, so it could gap down. But this, when I buy a put, it gives me the right to sell the stock for $96. So I'm risking about about $10 a share here. Now we could spend a little more and sell the 97 if we want. So we're spending a little more, but then we have the right to sell the stock at 97. And so it's a way of defining our risk, and we're in the driver's seat. So we're not going to risk getting nicked out on a wick, and then, we rue the day. And so we're going to make this good till canceled. And then we want both of these orders to be executed today. So order triggered by GTC. Okay. I can do it this way. Guess it didn't like the way I put in the order. Make this 124. I don't know why this is. Maybe I make that GTC. Okay. So I could have left this other order the way it was. Confirm and send. So when Netflix goes above 124, we want to sell it. It will have hit our target. And we also have the right, if the trade goes against us, to sell the stock now at 97 at any time between now and May 15th. Now, we don't have to go out that far because earnings is coming up. So if we just wanted to cover ourselves over earnings, we can come to the chart and we can look at this and say, well, earnings is April 16th. Do I have to go all the way out there? And the answer is no. This is a very heavily traded stock. So if earnings is the 15th, we could come just to the 17th, or we could come to the 10th if we want to give it a little more time. And then instead of spending $1.45, we could spend 82 cents. And then, if we buy it back or it expires and the stock goes up, then we can add a stop loss. So this might be something that we just want to do over earnings. And you could even make it tighter, and say, well, I would like to do this, buy this 97 here, and pay 55 cents. I'm buying the 80. We wanted this to be the 97. Oh, you know what? Here's several examples of how not to do things. I'm so sorry, guys. Earth to barb. Okay. So third time's the charm. We're going to buy first trigger sequence. We're going to right click opposite order, make this our 124. And then we're going to buy just enough. So then that costs us 57. And then we're going to make this 200 shares all around, and we're going to buy 2 puts. Okay, we're going to make that good till canceled. We'll make this good till canceled. Confirm and send. And we're going to put this in our stock with a target. Okay, So that's our first example. Chris mentioned eBay having a cup and handle. So let's look at eBay. So, eBay, when we look at a 2-year chart, it has been uptrending. It was using this 100-day, the black line, 100-day moving average as a support level, right? And then it really took off and started using more this 30-day moving average. And then when we come in and we look at the last 6 months or the last 9 months, we've seen this consolidation pattern, right? And this is where I think that drawing lines can really help lead the eye. So, no longer is a moving average acting as resistance or support. This stock is weaving back and forth between the 10, the 30, and the 100-day moving average. But if we come and look at, kind of recently here, we've got this double bottom pattern, and today it's breaking out. Now, we do have earnings coming up. And sometimes when it's like this is the first day of the breakout, some people might say, well, I'm going to place a bullish trade. And others might say, I just want to be sure it's a true breakout and not a fake out. So I'm going to wait to see if it continues to move up and maybe comes back to retest so that this range around this $98 level, I just want to see if that will hold as a support, that this old ceiling actually becomes a new floor. And others may not want to wait. So if we look at let's look at AMD. So when we look at AMD, like here's another stock that, and this is up 18% year to date. It's had quite a run in the last year. It's been very bullish. And then it's kind of consolidated since like Halloween, since the end of October. And so we have this big double bottom pattern potentially setting up. Now, it hasn't broken to the upside. Now, some might say, well, you see a double bottom. I see maybe a triple top. And it could be either one. We'll have to see which way it breaks. It's currently still trading within this range. Okay. So the jury is still out, but it's been like what, 10 days of it moving right to the upside. And we've seen something similar with Nvidia. Well, they're both tech stocks, so shall we feign surprise here? Where this has actually, I mean, that one was Halloween. This one was since, September, early in September, Nvidia, and I mean, Nvidia's had an extraordinary run over the last several years, but here was a case where it came up, and some would look at this and say, well, if I were looking at this back then, I would have been talking about a head and shoulders, because it kind of came up and then it came down, but it never broke below this base. And it's now hit this like multiple times, and then it flirted with breaking to the downside. But again, if you employed that idea of, hey, when this breaks down, I'm going to wait for it to bounce and see if this old floor becomes a new ceiling. And did it? No. Now, we've had it come, and here this broke out, moved to the upside. So we had 2 big up days, and then it started to pull back. And in fact, pulled back in, looked like it was breaking out again, and then came all the way back down, like not just once, twice, 3, 4 times. And then it kind of looked like, oh, okay, this range around this 195-ish looks like it's back to being a ceiling. And where is it today? Yeah, back at the ceiling. And there isn't a candle yet that indicates that it might not blow through that ceiling, but it also hasn't broken through. And this is a stock that we traded in a range bound way because it's been going this way for a long time. So just because a stock is going this way, is traveling sideways, doesn't mean that you can't successfully trade it. We were doing a trade called an iron condor, where we sold a short call vertical here where we wanted the stock to stay below, and then we sold a short put vertical here where we wanted the stock to stay above. Now, if you own the stock, you might say, well, every time it comes up and bonks its head around this 195, I'm going to sell a covered call up here. And then when it comes back down close to the support level, I'll buy it back. And you could have done that successfully so far for months. Now, don't know if you had bought this one that you sold a covered call here, bought it back here, you may not want to sell another covered call yet unless you want to sell the stock. Okay, so someone had asked about Dell, and that one was actually one that was on my list. So let's have a look at Dell. Okay, so Dell, they say the trend is your friend until it ends. Well, we saw Dell, and this is a bit of what I call a Tums chart. Like, I look at this last 9 months for Dell, and it's kind of like she loves me not. Like, it was uptrending, and then it kind of rolled down the hill there with Humpty Dumpty, where it looked like this 30-day moving average was starting to act as a support level. And even though I drew a line here, had I been looking at this back at this time, I might have drawn a line more like this, because you want to hit as many candles as you can. Now, we're looking at history now, but it started to break out, and then it came back to retest. So breakout, retest, and then it took off, and obviously it hasn't stopped since it's hit earnings. And now it's moving up so quickly, the 30-day moving average is having trouble catching up. It's been using the 10-day moving average more as a support level, or perhaps if we put a 20-day moving average on, a little more so. And this candle pattern here indicates it may pull back for a couple of days, but we've seen up to a 4-day pullback, but this support area has continued to hold. How about, we've looked at that. How about STZ? And because we had this, pullback in the general markets, like when we look at STZ, Constellation Brands, to me, this looks like kind of a bit of a messy cup and handle, where you have this, it came down, hung out here around this 126 level for a couple of weeks, came up to this resistance level, found resistance here, and now it didn't come all the way back down. So that's why we call this a cup and handle, but it hasn't really broken out yet, has it? But it could. Of course, it could come all the way back down, and this consolidation pattern could continue. There isn't confirmation on the charts that this has broken out yet. Okay, so that one you might want to put on your list, but you're going to say, how many times have we all heard we don't trade what we think, we trade what we see? And do we see a breakout on the chart yet? Yeah, we do not. Okay, TXN, let's have a look at that one. Okay, so again, we're seeing change in trend here. So we had something that was rolling down the hill. Yeah, using this 30-day moving average as a support level. And then it crossed the line, and all of a sudden, it's moving to the upside. And when we look at this most recently, I would say, if I'm playing I Spy with my little eye, I'm seeing a diagonal resistance breakout, came back to retest, and is on its way. And we're looking at this a little late in the game, but another V type pattern setting up. similar to what, we're seeing on the S&P and the NASDAQ as well. And so what I encourage you to do is just click through the stocks in the Dow or click through the stocks in the NASDAQ and just draw some lines and look at where you see support and resistance. Like when I look at Caesars, again, I see this double bottom about a $7 range, which is not nothing. It's actually a $7.60 range on a $25 stock where it broke out, came back to retest, took off, came back to retest again. And so this is where buyers might start coming in. And where might you put a target? Well, you could draw a Fibonacci extension, or you could say, like, I'm going to put a target about $7 higher. Or if you want to be conservative, make it $6 higher. So say, like, I'm going to make my target 31.66, 31.50, which is up close to this high here. So maybe just make it 31. Like it got up here that day, and it's currently at 26. And you might say, if I make it 31.50, that's a $5 move. That's not much. It's like, excuse me, on a $26 stock, $5 is 20%, I think. My math serves me right. So lots of stocks we can look at. And so I encourage you to do that. You may want to have a look at ANET. There's a diagonal resistance breakout. We might want to look at Boeing, which is creating a bit of a V pattern here. Also a diagonal resistance breakout. For solar, again, now this one, was kind of rolling down the hill. But when I look at this now, it seems to be finding a base because it's come and hit a similar low. So could this be kind of consolidating? And sometimes things take a while to consolidate before we see that trend reversal. And sometimes they consolidate and then continue falling. And so we don't have confirmation either way yet. But guys, that's support and resistance. So I want to thank you for being with me today. My ask is that you fill out the survey. It's 2 questions. James just reposted it. There is a link you can click if you're with us live. 1 means I hated it, 10 means I loved it, and there's everything in between. If there's additional topics you'd like covered, there's a comment section. Let me know. If you'd like the pace, let me know. If you'd like to see more or less, let me know. I promise to read each and every comment. Hit the like button. Subscribe to the Trader Talks channel. There's tons of great content in there that you can access for free. So you'll want to subscribe to that. And thanks to James for being in the chat. Thanks to the guys behind the scenes for doing all that they do. And I will look forward to seeing all of you. Tomorrow, I am filling in for Mr. Cameron May with Getting Started with Thinkorswim. Up next, you're welcome to join me for that. Up next is Swing Trading with Mike Fairborn, so stay tuned. Take care, everyone. Bye for now.